Most traders default to SPY. It's the ticker they learned on, the one they see everywhere. But if you're trading 0DTE options, SPY is leaving money on the table. SPX isn't just an alternative, it's a structural advantage. Here's why. Here's the fundamental difference. SPY is an ETF, a fund that holds stocks to approximate the S&P 500. When you trade SPY options, you're trading options on that fund. SPX is the S&P 500 index. You're trading options directly on the index itself, not a proxy. That distinction unlocks 6 structural advantages that compound into a real edge. Advantage 1. Cash settlement. Sell a vertical spread on SPY, and if your short strike goes in the money at expiration, you might get assigned 100 shares you never wanted. Margin calls, overnight risk, forced liquidation. SPX? Cash settled. The difference is paid in cash. No shares, no assignment, no operational headache. If you're trading condors, butterflies, or verticals on expiration day, cash settlement eliminates the single biggest risk. Advantage 2. The 60/40 tax rule. Under IRS Section 1256, SPX options get preferential tax treatment. Even if you held the position for 5 minutes, 60% of your gain is taxed at the long-term capital gains rate, 40% at short-term. SPY? Every trade under 12 months is taxed at your full short-term rate. If you're making $50,000 a year trading 0DTE and you're in the 35% bracket, that 60/40 split on SPX could save you $4,000 to $5,000 a year. That's real money, and it compounds. Advantage 3. Liquidity. SPX 0DTE options now represent over 50% of all SPX options volume on a daily basis. The bid-ask spreads are tight. Open interest is massive. Fills are fast. That means lower slippage, better prices on multi-leg strategies, and the ability to get out fast when volatility spikes. The institutional money, market makers, hedge funds, algorithmic traders, it's concentrated in SPX. That gives you a deeper, tighter market. Advantage 4, and this one is brand new. On June 4, 2026, the SEC officially eliminated the pattern day trading rule. For years, that $25,000 minimum locked retail traders out of active day trading. That barrier is gone. Traders with smaller accounts can now enter and exit 0DTE positions freely. No more counting day trades. No more sitting on the sidelines. And as new participants enter the market, SPX becomes even more liquid. Advantage 5. European-style exercise. SPY options are American-style. The counterparty can exercise at any time. If your short goes deep in the money mid-session, you could get assigned before price reverts. SPX options are European-style. They can only be exercised at expiration. You have complete control over your position for the entire life of the trade. For 0DTE, where prices can go in the money and snap back within minutes, this is critical. With SPX, you ride it out. With SPY, you might not get the chance. So let's put it together. Cash settled, no assignment risk. 60/40 tax, lower rate on every trade. Deep liquidity, tighter spreads, faster exits. No PDT, trade freely with any account size. European style, no early exercise, full control. And the fastest growing volume segment in all of options. It's not one advantage, it's 6, and they compound. If you're trading 0DTE, you owe it to yourself to trade the instrument with the structural edge. That instrument is SPX. SPXXL classifies the SPX session in real time, giving you the regime, the score, and the structure recommendation before you place the trade. Start your free trading week at SPXXL.com. No credit card required.